Heyo, welcome to another edition of Market Fund 2K. Today we're going to be jumping into some charting. Obviously, we're going to try to give you some of the basics, like what all these different things mean, these lines, the diagonal lines, the channels, the curves, all that. How does that all even work? So here we are on the eve of election day, and a lot of exciting things are going to be happening tomorrow, but figure we could get some of the basics hammered out today and be a little bit better for when things are starting to go a little haywire tomorrow. So what I got up here is something called an E-mini chart. So the only thing that means is this takes the S&P 500 biggest companies in the industry and puts them all on a graph, just like a couple of other ones do that we've been talking about before. The difference with this one being E-mini means that it runs 24 hours a day. So even in the dead of night, you can see the price action, the futures, the expectations, all that type of stuff. The reason why I'm using it today is because, as you can see, don't have any markups on it yet. So we can just go in and start from a blank slate. So without further ado, the first thing we're going to want to look at is a horizontal line. And the reason we want to look at a horizontal line is because it only requires 1 point. So right here we notice that there's been an all-time high. So the all-time high, the one single point, can define a horizontal axis. So I can go ahead and place a horizontal line right there. And that is all you got to do to set a target for when is the price going to go back and exceed that again. So you've always heard the phrase that it takes 2 points to make a line, but in this case it really only takes 1 point. So back here we can do the same exact thing if we reverse time back to about the year 2000, where it came to an all-time high for the time, and as you can see here, bounced off of this line and reversed lower. And the question on everybody's mind several years later was what's going to happen when it comes back to this zone. So it just so happened that in late 2007, early 2008, it came back to this level again. So the first point here that defined the horizontal line, we go through, and the next time that confirms it. So it confirmed that that was actually an important price zone, and in that particular instance it called for a further downturn. So when you look at it happening, did it happen again? No. The third time went through, there was really no reaction whatsoever. So these things aren't 100% fail safe. It's just a question, will there be a reaction or will there not? So when we came through here again in 2013, everyone was probably wondering if there was going to be any type of a reaction on this line. Was it going to mean anything in particular? But when it blasted straight through, it kind of gave the all clear that in 2013 we were at this zone. We achieved a higher high, higher low, and off to the races. We were able to increase the return percentages significantly in that time period. So let's see here. Yeah, we do have it. So after we did the back test here in June of 13, we ran up an additional 34% by the time that 2015 came along. So that's a really nice return on the most simple indicator that we have. Does it have resistance in this zone? If not, then it'll continue to run higher. So if you go up to the present day, here we are again. In January of 2022, we had this line of resistance here. And now, it's several years later, we'll probably get to there again and wonder, is that going to be another point of contention? But let's move on to the next one here. And rather than just being a horizontal line, we can do a trend line. So for a trend line, it takes 2 points. So we got point number 1 here, point number 2 there. So as you can see, those 2 points are going to define the trend line. So it takes 2 points in this instance to connect together and make a line. Does that mean anything, or does that not mean anything? We have to extend it to find out. So let's go ahead and extend this a little bit farther. And the 2 points have defined the line, and here we are, the third point has confirmed it. So that is confirmed to be a sloping line of resistance, where the first point and the second point defined it. Third point, it bounced off this line of resistance, and now here's the question: will it get to the sloping line again, and will it be another line of resistance here in the near future? That time will tell. And the reason why it becomes valuable and interesting is because it can show us what the price action is going to do. In this instance here, it came right up to the line and bounced off of it. So as soon as it bounced off in like this zone, we knew that we were going to be in for another further downturn, and actually it ended up making a lower low down here. We could do the little horizontal line thing that we talked about earlier. At this point, the June bottom is what it's often called. So let's go ahead and pop a line in there. And this one I'm going to make red to show that it's a bad thing if we get down to this line again. All right, so now we have kind of our envelope, and we have our defined space here. We can go ahead and extend this all the way down to the red line. And now what we have what I call a decision triangle. So in this zone, the market is trying to decide what it wants to do next. So I'll just go ahead and fill this in here and show this as a point of decision. So here we go. So here we are now. We are, what's today's date? November 8th, 2022. And we're about kind of halfway through this triangle here. So what's going to happen is this price action is going to bounce around in this triangle, up and down, have reactions off the top and reactions off the bottom, until it gets to a zone, somewhere throughout this, where it's going to make its decision, whether it wants to break out and disregard the sloping line of resistance, or when it wants to drop below this local low here. So as you can see, in the past week or so, I've been over here about a month. Let's zoom in a little more to get a little more detail. All right, there's our triangle. There's the red line of our previous low, and here we are in September, October, November. As you can see, it breached through this lower low several times. So the first time it tried to go down through it over here, September 28th, it dropped below briefly, then it hit a period of support. The bulls came in and tried to boost it above this line again, fell below. They had the rescue operation where the bulls came in, they're trying to boost this up, trying to start a new rally, trying to get back to those all-time highs, but it kept on sinking down and sinking down. So actually this is a perfect segue into our next type of tool here, which is the curved line. So the curved line is defined by more points. So we have 3 points on the curve, and we're looking at the green one because that looks like a positive reversal. And what we got to do is we got to line this thing up so it actually matches up with as many of the points as possible. Let's go ahead and give ourselves a little room here. So we only do have 3 points on the curvature, but we are trying to match up all the relevant lines here. So this is a little bit of an opinion type of a thing. So which points are relevant? You could connect any of these lines up a million different ways. You just got to figure out which ones are the actual relevant pieces of information. So right here, what I did was I saw that these points 1, 2, 3 looked like they were bouncing off a curved line, so that's why I put the curve in here. This one being the most significant down at the very bottom, and then the most recent action here. Now this is the part where I could put it up like this, and that would indicate that we've already broken down through this this curved line, or I could even say something like this, where I thought that this would be the significant way, but these curvatures are getting way too extreme. So what I try to do is I try to define it as well as I can from the downward side, and I try to mirror it across to the upward side, so it looks like a pretty good curve. So right here, of course it's not perfect because I just did it freehand. I didn't use an equation to do so, but that is looking like a pretty moderately good curve in my opinion. So that is showing me that when you hit a curve like this, it could be a reversal. So this is like the downward momentum coming in at the end of September and coming into the beginning of October. As you can see, the curvature is starting to get a little less steep, and then the price action is moving up in the opposite direction. So I would say this curve is defined by 1, 2, 3, 4, 5, 6, 7 points at least. So when you're looking for something with curvature, you're looking for as many points as possible, and you're looking for something that's very symmetrical. The other thing you could do is you could do multiple curves. So in that instance, you have like this is the bottom range. You're looking for a top range. You could just literally just copy and paste this curve and try to line it up with something up above to see if that is making any kind of sensible channel with it as well. This one, however, really isn't giving us that much. As you can see on this left hand side, it looks like it is kind of within this this curved channel, but it starts bouncing out of range quite a bit. So not 100% sure if this is going to be exactly correct, but let's go ahead and continue the exercise though. So I'm going to go ahead and pause it. I'm going to draw a couple more lines in here for you. You don't have to watch me do every single thing, but be back in a second. Okay, and we're back. So I do add a couple more curves here just to show that we could do like a full channel, and we could put like a dotted line halfway through the channel, and just to show that this top section here might still be reacting on this curve. So it's possible that this could be still good information, and as it exits over in this section here the past day or two, it is following along the curvature. So that's just a little more of an advanced one that is trying to predict things that are very unpredictable. So as you can see, like I said, many dots define this curve here. This topmost one, this dotted one, I guess I would say 1, 2, 3, maybe 4 points touching. So that's still pretty decent approximation. So in recap, we have the horizontal, which is all you need is 1 point. Then we got to the diagonal version. As I think it's all stretched out. Diagonal version needed to be defined by 2 points. Curve, you're going to need as many as possible, at least 3 for each individual curve, and then you have the families that need more. After that, we can look at channels. So if you have a parallel channel, that is going to be defined by at least 3 points, 1 and 2, just like before. But in order to define a channel, we want to have a lower bound, so we're going to look at the next closest lower bound here, and that's all you need to define a slanting channel. And then the next time that it hits, that would be the confirmation. Unfortunately, this one here wasn't following along with the channel bounds that we defined, so we had to continue it out. And as you can see, the lower bound is not quite cooperating. It's not quite reacting the way we thought it would. But the upper bound here, that third reaction, that is what defines the entire channel as well. So that's a couple simple things there. Another one I wanted to go over real quick here was the disjoint and the flat top curved bottom. So let's go back in time a little bit. We're going back to the 2018, 2019, 2020 time zone. So as you can see, three successful lower bottoms. So we take this this disjoint, and we have 1, 2 that is defining the channel, and the third one here doesn't quite line up, but we're looking at these first two is going to be the ones that define it. And then going in the other direction, we look for the next closest maxima. So that would be this point right over here will be the next closest maxima. And as you can see, that defines very well this next peak and this next peak over here. So this is a really interesting type of channel because it shows that the background. It shows that the volatility is getting higher and higher. So volatility gets high up and down quite a bit higher in each direction. It shows that there's more gigantic price swings happening in both directions. If we go back to all, we can see that it happened as well in the 2000 to 2008 time frame. And we can try it again. So I think they gave us just enough points here. Looking for 1997. And yep, that does define it pretty nicely there. Not quite on the top end though. So this one didn't quite work out quite as well. But as you can see, sometimes if things aren't fitting exactly right, then you might need to kind of redefine what you're looking at, redefine what the best way to get the shapes together in order to appropriately figure out what's happening now, what's going to happen soon. So the other thing I wanted to do was I wanted to go back and focus on 2008 for a second here briefly. So we need some details. So we're going to keep it in the 1 day view, where we wind several thousand days here back to 2008. And we're just going to zoom in a little bit. So 2008, we're looking for, let's take auto off for a second here. We want to crunch this down. We're looking for the calm before the storm. So in 2008, there was kind of a similar look to what we're seeing right now, and that does fit into the flat top / bottom model. So we go to the absolute top here again, like we were looking at just the other day, and we go ahead and pull it down, and this gives us a nice little triangle. So what I did is I defined the slope by the first and second point here. That defined the slope, pulled it all the way down until I got to this area here. As you can see, it stops at the same exact point twice in a row. So that defines a flat bottom, curved top. And something that I like to do that I know that other people, I haven't seen other people do quite yet, it hasn't quite caught on yet, but I'm sure it will, is extend this this type of a pattern beyond the termination limit here. So keep on going, and you want to make sure that you're keeping the original slope from up top there, which we are. And on the other side of this channel, you can see that there are some more reactions. So it hit it twice here, it popped up and went out of the configuration, but then as you can see right here, it popped right back in. So we're in this similar zone right now, and why I think it's interesting and important is because, as you can see, it popped out of this configuration, out of this zone, in the continuation part of this triangle channel, and that's when we had the big scary downturn in 2008. So there is quite a bit of downturn left here, and the biggest and steepest parts happened after this entire pattern had been concluded. So after we popped out of this, we still had another 41% down until we got to the actual termination end downturn of this 2008 type of a crash. So that to me is very relevant, very interesting. We can go back to today's time frame, And of course I did this a little too soon. So what I'm going to do is I'm actually going to copy and paste this exact shape here and put it on today's time frame and see how it matches up. It's still back there. Sorry, just 1 second here. Gotta go back and grab it. Oh, there it is, sitting out in the middle space, of course. Yep, and it likes to deform it when we're doing certain things here. So, gonna give it the pause one more time and reform this deformity. Okay. Hold on. After a couple of false starts, we finally got it here. So back in the 2008 time frame, this whole orange configuration took 361 days. And so what I did is I copy and pasted that right over top of our current situation. And lo and behold, also 361 days. We're pretty darn close. I'm just doing this by hand. So 358 and there we go, 361. So what we're looking at here is extremely similar to what we had in 2008. Now, does that necessarily mean that it's 100% going to happen again? No, but it definitely does look at how very similar things have been to that capitulation and how close we're getting. We are very close to the edge here of where it fell off the cliff. So we will know within, let's see, we're 8th of November. We will know by the end of the year whether we are going to be going into that deep fall off. And that's what all this is for. That's why we're connecting all these dots and connecting all these lines, just to see where could we possibly go from here. Not necessarily just an up or down type of a thing, but a continuation, re-up of what happened last time. Or will this curvature start coming into play? So theoretically what we could get is we could get this curvature working its magic. Tomorrow being election day, we could have another pull out of this little dip and reach all the way back up to this blue line that we've established. And then once it does hit that blue line we've established, it might bounce off, and then we'll see the big fall off near the end of the year. It could do something completely different. I'm not a crystal ball reader, but I'm just trying to figure out what's the stipulation, what's the criteria. So if we hit this blue line and we're able to exceed it and start passing up some of these higher and higher levels, then I kind of doubt that we'll get another type of a big crash like we did in 2008. But if we hit this line of resistance, this strong resistance that's been established and referenced and has been down to almost the penny, a very strong line. If we hit that again and bounce off, then things are going to be quite worrisome for 2023. So I will leave you with that. More to come. Ask me whatever you were looking for me to explain more about in the comments, and get out and vote. Happy trading.